Right, settle down, will you? Stop staring at your blinking screens. You've already lost the money. It's the 13th of May, 2026. I've spent my entire bloody morning crunching numbers for this Korean market report. And frankly, looking at a bin file would have been more uplifting. Kospi closed at 7,643, down 2.29%. Brilliant. Let's just get on with it before my coffee goes completely cold. Layer 0, the broken chain. Everything in finance is connected, which sounds terribly poetic until the whole lot comes crashing down on your head. We've got a massive disconnect here. Goldman Sachs upgrades Korea's growth to 2.5%. AI chip exports are supposedly going to the moon, and yet foreigners are dumping stocks like toxic waste. It's a fundamental mismatch, isn't it? Look at Chain A. Absolute rubbish. Foreign investors have pulled out a staggering 20 trillion won in just 4 days. 20 trillion! They dumped 342.5 billion won of Samsung and 250 billion of SK Hynix just yesterday. Why? Because the won is bleeding out at 14.92 against the dollar. If your portfolio was losing value just by sitting in the wrong currency, you'd be running for the exits too, mate. We've sorted these headaches into phases, so you can pretend you have control. Geopolitics, phase 2. The WTI oil price is sitting at $102.5 a barrel, and the market is still in pure, unadulterated panic mode. US CPI at 3.8%, phase 3. The big boys are currently recalculating how poor they'll be. And that national dividend nonsense from the politicians, phase 4. Complete noise. Ignore it. Here's the scorecard for what's ruining our day. Middle East tensions score a 95, with a Z-score of plus 3.2. For those of you who slept through university maths, plus 3.2 means the market is having a historic overreaction. The US CPI surprise sits at 75, and Goldman threatening us with a 50 basis point rate hike from the Bank of Korea sits at 60. I put a formula on the slide. Don't look at it too long. You'll hurt yourselves. 1,492 won to the dollar. Look at that number. It's a vertical line straight to the bottom of the Thames. When a currency is this weak, foreign investors don't hang around for the lovely Korean barbecue. They sell everything that isn't bolted to the floor. Until the central bank actually steps in, we are basically pricing in a sovereign discount. US 10-year Treasury at 4.46%. Gold hitting $4,686 an ounce. Look at that slope. When the cost of borrowing goes up this fast, your lovely little structural growth stories start sounding like absolute fairy tales. If the risk-free rate is pushing 4.5, why bother buying a loss-making tech firm? That's basic arithmetic, really. Some politician mentioned taxing AI profits for a national dividend, and the retail market nearly had a coronary. Let me be absolutely clear. It's a personal opinion, not a bloody law. The market got spooked because it's already nervous, like a cat in a room full of rocking chairs. Focus on the actual blood on the floor, not the political theater. Right, the crystal ball section. 60% chance of our base scenario. WTI oil stays between $100 and $105. We drift aimlessly, maybe down 0.8% to Kospi 75.80. 25% chance of the bear scenario. Missiles fly, oil breaches 110, and Kospi drops 3.5% by lunch. And a 15% bull chance that oil drops below 100. I wouldn't bet my pension on the miracle, quite frankly. So where do you hide? Overweight cars. Hyundai Motors, ticker 005380, they saw 59.2 billion won in foreign inflows because they actually make money when the dollar is strong. Overweight energy, like S-Oil, ticker 010950, it's a hedge for when the world burns. Semiconductors? Pure gambling at this stage. Avoid aviation and utilities unless you actively enjoy setting your cash on fire. Risk management. Keep your total position size strictly under 30% of your assets. If Kospi breaches 7,400, you cut 50% of your holdings immediately. No waiting for a dead cat bounce. You chop it. If you're buying, do it in quarters, at the close, over 3 days. Don't be a hero.
Right, that's the lot. Any questions? Actually, put your hands down. I'm not paid enough to explain duration risk to you again. Read the disclaimer on the screen. It basically says if you lose your house, it's your own bloody fault. Cheers, I'm off to get a horribly overpriced pint.